Good morning, traders. Today is August the 13th. My name is Neville Hornsey, market analyst with YouTrading, and today I'll be talking about the euro versus the British pound. Okay, I'm going to start with the YouTrading.com economic calendar. And if you look here at 10 o'clock, we had some trade data. If I just click on the tab, it says trade balance, also called net exports, is the difference between the value of a country's exports and imports over a period of time. And a positive balance or trade surplus means that exports exceed imports. And if I just close that, the actual number today was 18.1 billion versus the 12.3 billion. And that's obviously positive, which is good for the Eurozone because that means they're selling their manufactured goods. That's how the Eurozone will, grow their economy. If we go to the YouTrading.com heat map, the Forex map here, you can see that the euro is pretty much green across the board. And if you look to the British pound, that is red. So we're looking to buy strength and sell weakness. So buy the euro, sell the pound. If we go to the chart, you can see that we have come down from the sort of 20th of July down to support at the 0.85 level. Then that level broke and now momentum's changed. And you can see here that the 10 is over the 20 moving average. And so not only is price action going higher, but momentum's higher. We need to be aware that, these guys here who are defending the 0.85, they could be looking to reverse. And if we go to the sentiment indicator on the active trader platform, almost 90% of the retail traders are long. So, what I was considering as a long euro versus the pound, I'm now not sure of because generally the retail traders are wrong. So maybe I should be looking to go short. Okay, so we've got bullish momentum seen through the moving averages. We've got price action going higher, but we've also got a strong bias of retail bullishness. So, if they were wrong, where would they get wrong? Well, here we see a big green candle. And that's where the last of the buyers defending this sort of 0.85 stepped in, only to get overwhelmed by the sellers, and the bearishness took over here. So if I was long here and I want to get out of my long, then this is the sort of zone I want to be looking to reverse that or get out. All right, so if we go down to the 30-minute chart, this candle here was green, and then it's preceded by a big bearish engulfing candle. And then you can see here, that's when the 0.85 level broke down. So this red box I've marked up is the possible reversal zone. And that's where we could see the reversal. Like I said, 30-minute chart, 4-hourly chart, the 10 is above the 20. So momentum's to the upside. You can see that price action is also going to the upside. So we want to be long. It's just we need to be aware that there could be a possible reversal in the next sort of 20, 30 pips. So if I just close that down. Okay, so how could we have got long this morning? Well, here you can see the end of short trading last night, 8:30 p.m. We had a push up, big green candles, and then some supply came in just above 0.85. And then we saw prices come down, find the dynamic support of the moving averages. And then this morning, this is the 8 o'clock candle. They tried again at the London Open to get through this supply here. Couldn't quite do it, came back down. But then on the good trade data, so this 10 o'clock candle here, lots of buyers came in, took out that supply, and then we've gone up higher into that possible reversal zone as I was talking about. All right, so how would I have got the trigger? So the momentum's to the upside, obviously price action's to the upside now. Here we are on the 5-minute chart. This is the sort of high from this morning from the London Open. Then we came down, and then the 10 o'clock candles here. And that's where you see this big sort of set of green candles, the big impulsive move higher, breakout, retest. So we could have taken a long at the highs here. So this is the high of the breakout. Or because we had red candle, red candle, red candle, and then this little green candle, you could have got long at this green candle. Then, buyer stepped in at what was resistance, now support. And then that's when we've seen these prices go higher. Obviously, like I said, you could have taken a long here, and that's where you see this big acceleration higher. So you could have ridden that, but that's obviously going into that period of danger for the reversal. And that's what we're seeing now. So if you've got long here, you definitely wanted to have trailed your stop up, and you would have been stopped out by now, I'd imagine, either at the 20 or the 10 or the 20 EMA. Right, so it looks like prices might be reversing out of this possible supply zone. Go to the 30-minute chart. Obviously, I'm not going to take a short right now. I'm not that aggressive. What I would like to see is a break lower of a previous swing low. So if I go to the line charts, here you can see a swing high, swing low, swing high, and these are the closing prices. So what I would like to see is a break of this swing low here. So that would be a break of that closing price. And then, like I said before, I want to see a breakdown, a retest, and then a continuation lower. So that's what I'm waiting for. We would have seen higher time frame supply come in, then we'd have seen a break of price action, so market structure. By then, I'd imagine the 10, the red moving average, would be below the 20, which is the green. So the momentum would hopefully be to the downside on the 30-minute chart. Price action obviously would be to the downside, and then we could start looking for a 5-minute trigger. So if we go to the candle chart again, like I said here, on the way up, we were looking for a retest and then continuation higher. And I used the high of this green candle here. So red candle, red candle, red candle, green, take a long off the high of that. So in reverse would be, we would get, breakdown, and then we'd get green candle. If I just put, where's my arrow? We'd have a breakdown of red candles, and then we'd have a set of green candles, and then you either take, a short off the first red candle here, or you take a short from the sort of swing low here. So that's what I'm looking for from now on. I do believe this is a great area to get short. I'm not that aggressive that I want to get short right now. I'm waiting for maybe this swing low here to get taken, or this swing low here. And yeah, as long as I see the moving averages curl over, everything is setting up for, a reason to get short. Okay, I hope that makes sense. If you've made money this week, try and hold on to it, go into the weekend happy, and then start next week, even happier. And I'll catch you next week. All right, take care.